A very good morning, everyone. Welcome to Admiral Markets. My name is Chris, and I'll be the host of this webinar where we take a look at live Forex charts and the market of today, the 21st of April, 2015. So good morning, everyone, and hope you had a good weekend, time a bit to relax and get ready for what could be maybe an exciting Tuesday, I would say. It was a bit quiet on Monday, so let's take a look in a second. First of all, this PowerPoint explaining the fact that this webinar is intended for a global audience. It may not be suitable for everyone. To find out more information about that and other conditions and details, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and other financial markets are considered high risk and may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. Alrighty, regarding the deposit bonus, it's still valid for April, so still a couple of days left. If you're interested in that, take a look. Basically, there's a deposit given on your initial, there's a bonus given, sorry, on your initial deposit. So take a look at this link for all the details regarding terms and conditions. And today, we will be using the Camarilla pivot point indicator, which is basically using 6 levels to indicate support and resistance throughout the intraday trading or intra-week, depending on which settings you use, but you can use it for defining the support and resistance, for breaks and bounce spots, but also kind of to gauge the momentum of or sentiment of today, if it's in a range or trend, and in which trend it is, up or down. So it's a very useful, I think, indicator to get a bit of a feeling for the potential of price for that day. So we're using that, but because it is Tuesday, I do also want to take a look and take a look at the bigger time frames to get a bit of a idea for the long term as well. All right, so that's going to be our focus for today. Let's quickly, before we actually take a look at the charts, take a look at this calendar, and we will see that we have German ZEW economic sentiment coming up in 2 hours, and otherwise medium and lower impact news. Alrighty, let's continue here. First start with the euro dollar and take a look at this. Good morning, Kalian. Good morning, Justinus. I am doing well, thanks. Good to see you both, and others, of course, too. The weekend was good, so I had some nice weather, so was walking a lot, getting some fresh air. Was always handy. So, with regard to the euro dollar 4-hour chart, let's start with that. Let me just allow me to make one change here that I don't have on this template. Good. Quickly save that. Alrighty. So we see the euro dollar moving up pretty strongly, but now moving down. For me personally, I still think that there's a high chance that this is a expanded zigzag, which means if we put a fib from here to here, I would still expect a potential bounce at the 50 or the 61.8 fib, right? So for those that are interested specifically in Camarilla, I would just ask your patience for me to take a look at these high time frames, and then we'll definitely use that and zoom in. So the 50 fib, 61.8, even the 78.6 could be bouncing spots. Of course, if we push through these fibs, there could be space from the 50 to the 61.8 and from the 61.8 to the 78.6. And on the lower time frame, those could still be good spaces. Just like, for instance, the price stopped at the 38.2 fib here, right, at 107.25, went sideways and then fell again, right? So those spaces there are okay if we zoom into lower time frames. From a higher time frame point of view, from a 4-hour point of view, they're quite smallish, these time frames, these spaces. So maybe from a swing trade perspective, there's not a lot of space. But that said, I don't want to underestimate the downside either. We did break 2 support levels here. So for the moment, the pressure is down on the euro dollar. The question is how much could it go before we might see a bounce back up, right? And we could maybe see a wedge in that regard. If it does this, for instance, bounce, let's say it bounces at the 61.8, it makes a rally. It will certainly probably, I mean, there's a high chance that it will then make a rally down because we don't have a lower high, excuse me, and we could get a wedge like that. That would not surprise me personally. So let's keep an eye on the 61.8. That's still about 40 pips from here. On the daily chart, we already have a wedge. In fact, we have a triple top here and more or less kind of a hanging bottom or a hanging double bottom or a W kind of pattern. So we're already consolidating. I would consider this a consolidation personally. And if you look at the weekly chart, we can see that this is the 5th week we haven't broken this bottom. And this is week number 6. So we're reaching kind of a critical zone. For those that know my time factor rule, 5 to 6 is where I start to pay attention carefully if that momentum is finished. In this case, the bearish momentum to the downside, which started all the way here at May 2014, almost a year ago, right? We've had continuous lower lows and lower highs, except a couple of candles. And if they didn't break within the first or second candle, they did within 5 to 6. So that would be an interesting to see if we do get that pause here and a bigger correction. Now it's kind of the crucial week, so I'm kind of curious, to be honest. So let's see. Going back to lower time frames, though, you can see why on the weekly and the daily we're getting into an interesting zone, and why on the 4-hour, therefore, I would be cautious of these fibs. Maybe now you see my point a bit more. Madras is saying that the 50 has the most confluence, and I guess we could add pivot points that we might see confluence at the 50 a bit more than now, but I think the 61.8 still does have this bottom here, so, and it's a golden fee fib, so I still think that that could be a level to be cautious of as well. The 50 fib has more confluence, Madras says, because of the historical resistance and trend line. Okay, yeah, that's true. This trend line indeed. So I agree on that, but at this moment, I do think that the 61.8 still remains, has an importance. If we use counter trend fibs, or let's say counter the 1-hour trend fibs from top to bottom, typically the 61.8 is lined up with a target, which is the minus 61.8. So if we put a fib on the very first swing high, kind of the first reversal, right, then actually the minus 272 target is the target because we went up to the 78.6 fib. So, okay, well, anyhow, typically in any case, but not here because we went pretty deep, but typically these will be aligned. Let's see if that is indeed a bouncing spot. The 50 could be 2, as Madras is saying, any of the 2 or even deeper. So let's zoom in to the 30. And we have an L5 target, 106.25. We're picking up substantial speed at the moment in the first hour of the European session. Personally, I would not short it right here at the 50 fib. and we're already at the L4. The only thing that does make sense in my opinion is, let's zoom into the 5-minute chart. This is a pretty strong fall, as you can see looking at the oscillator here. And it has fallen already for quite a long time. We're looking at already, what time is it now? Let's see here, it's 9, maybe 2 hours, I guess. Yeah. Yes, true, Modros, I agree. I wouldn't go here because, first of all, we've fallen quite a decent amount. 60 pips before London opened is quite substantial on average. And the chances of a bounce here, I think, are decent. Would I want to buy it? Not really against this momentum. It's a bit too soon, I think. But yes, it could, now or 10, 15 pips lower, it could, or even 20. At one point, there is a decent chance to get a recovery and a retracement here. So it makes more sense probably from, if there are two perspectives. One is you could look for a long at the 50 fib, right? Which would be is counter the 5-minute momentum, but there are reasons to see a long as well. Or wait for it to retrace, show some signals of a bounce at 107 at the L3 here, and look for one more short down to the 61.8 at 106.50. Okay, we got 3 minutes left, so I'm curious how this 1 hour candle will look like. Regarding the long, personally, I would at least keep an eye on the hourly chart probably. But if you really want to use a scalping way of getting in, a 5-minute chart would be a way. What we'd have to look for though is 5 to 6 candles, in my opinion, not breaking this bottom. Preferably the AO kind of turning here, maybe having 3 green bars, for instance, and then we get a kind of a hook back like this as a weakness sign. If we get that, that could be a long, a risky long, but it could be a bounce because of the 50 fib, for instance. It's a hook back. The end of this momentum is there, and there could be a rally, right? How big that rally will be, it's difficult to say because of the fact that it could hit this resistance zone that I just talked about and still fall further. So it could be a limited rally as well. So the tactic would have to be wait for the hook back, take the entry, see how price responds here. If it is showing signs of going back down, get out for break even or small profit. If it's showing the potential to do this, then the trader managed to get in at a cheap price and can see the rally continue. But a bit of a pullback here will always happen, right? We know that everything goes in with ups and downs. Well, anyhow, so for at the moment, I think both sides are a bit early. So let's take a look at the indicator here showing relative strength and weakness for the fun of it. Let me bring it up. And in the meantime, actually, Kalian, I haven't seen you around. Is that true, Kalian? How are you doing? I'm not sure if you joined recently, but just want to check. Curious how everything is going. This is the euro dollar, but the most important is not the price, but this indicator at the bottom. And just curious here. Let me refresh the indicator just in case. Great. Good to hear that, Kalian. Let's see. Here's the 5-minute chart. Euro crashing, as we can see. problem with that, of course, is the fact that, yes, it is a substantial angle, but it's all the way at the bottom. So you would rather try to catch it here, more at the beginning of this, when these strengths and weaknesses are more at their start. Is there anything else going on? There are a lot of divergence here between these lines. We see also, what is this, Swissy weakness, pound a bit. We see New Zealand strength and dollar strength. Let's take a look at maybe a pair that is relatively starting, like the pound maybe, perhaps the Swissy, and match it with one that is starting its upside here, but Aussie, yen, or CAD. So let's take a look at a mix of these. Perhaps Swissy against Aussie, odd Swiss. Let's take a look at the odd Swiss, the CAD Swiss, the yen Swiss, Swiss yen, and also the pound against the yen, odd, and CAD. Okay. But obviously, the Kiwi and the dollar are the strongest at the moment. So it's just that they've traveled so much. I have my doubts about, as I said, trading right here. And you see the momentum is still continuing on the 5-minute chart, lower and lower. That's the thing. It could ride for an X amount of pips. We have no idea, but the reward to risk is dubious here. 1-hour chart. Let's see. There's divergence. One-hour chart. Yes, between these tops, indeed. Yeah, that's something you mentioned in Twitter, right, Motors? I agree. And we're seeing the correction now indeed take place in this channel. Alrighty. So anyhow, regarding the Camarilla, for those that are joining maybe specifically of the Camarilla, I didn't talk about that much on the euro dollar. But the idea is that the L3 is a long, L3 is a range level, so it's either a long or a breakout. In this case, we broke, so you can see that the target now is the L5. We are passing the L4, which is still a potential to trade. That's why I said if we get a hook back, there could be a short till the L5. All right, so but I wouldn't take it here. I would rather wait for a bit of a pullback. Alrighty, so let's take a look at those mixtures of Swiss and pound. Pound, first of all, maybe against the CAD and against the Aussie. First, maybe pound CAD. Let's take a look. CAD making some good gains against the pound, weekly, daily. 4-hour chart is the only one that we're seeing some kind of bigger consolidation, kind of a wacky correction at the moment. All right, let's go to the 30. Take a look at the camera levels and still in a range area at the moment, but this does make sense. I mean, if it does break out below the L3, we certainly have the daily, weekly aligned. We've got a 1-hour bottom here and 4-hour bottom here. but we have not made on the 4-hour chart any higher high here. So definitely still in the downtrend at the moment. All right. Yeah, so any push below this 182.10 could merit a short with a stop loss above here, targeting the L5, but being cautious of the L4. So that does seem to be okay, but let me compare this one with the pound odd and see which one is maybe better. Let me refresh this template. Let's take a look at this. The pound odd is more stuck in a triangle. And we can see definitely using kind of these levels to make pretty substantial ups and downs between those levels. So from that point of view, we're in the middle, so this seems to be less interesting. So I think we can move on. Personally, I would already skip it just because of this. I mean, we can take a look at the 30-minute chart. And we see that basically the L5 and H5 are roughly at the edges of that consolidation. But all in all, compared to the pound CAD, it doesn't match up as well as the first one. Alrighty, let's take a look at pound yen, but Motors actually mentioned something under euro dollar. Let me take a quick look. Yeah, I think, no, wait, here. There. Yeah, you can see indeed, if you take away these other currencies, you would see the euro and dollar better indeed. That's true, Motors. And then you would see the gap better. Basically, the thicker one is the dollar and the euro. And the lighter ones are the other currencies. You can change probably those settings as well, by the way. But indeed, you see the moment they start to kind of diverge from each other around here, I would say, at relative, not right away, maybe the first signal. I mean, here, do you see already a gap between them? But that's maybe on the early side. I would wait till a bit more confirmation, maybe here. Taking a short there, you're doing pretty well indeed. Now it's a bit on the late side, as we said. But pretty handy to see that gap, to have an idea which currencies are the most interesting. I think you can use Camarilla for both, in fact, but that's why I personally like to look at the higher time frames. If it's, for instance, let's say there's a 4-hour uptrend and price reached the L4, that could be a good discount for upside. Or in a downtrend and price has reached H4, H5 within the intraday, that could be a good discount for more downside. Ultimately, if you don't like looking at higher time frames, or rather just stick to the lower, like 30 minute, then probably I would recommend to focus more on the width trend setups, unless you see a lot of confluence, because it would be riskier. Kaylin has some advice, by the way, on the Camarilla for those interested in the Camarilla. Traded 2 years so far. So let's see, the levels changed based on time zones. So indicator should have an input category to enter time zone. If not, it doesn't work perfectly and becomes one more indicator for confluence. I might be completely wrong, but this is my observation. Yeah, I use it for confluence myself too, as an extra level. If you only want to use it, I guess yeah, I think it's still probably best as a confluence. Even then, it uses as a confluence with fibs and trend lines. But Kaylin says if you do want to use it as a standalone, then it's better to use a time zone. Let me take a look. if this one has a time zone or not. Probably not, but don't think so, indeed. All right. So, pound yen. I think what Kaylee means is just the time zones of the world, GMT, that you could enter the time zone of the broker. Pound yen daily, downtrend at the moment. Weekly too. Although we could see reason to have, support levels maybe not too far away, right? But that's something to be cautious of. 4-hour chart, actually uptrend, although we did break the bottom here. Bit of a mixture at the moment. No, not actually. No, sorry. There is downtrend in the 4-hour chart. Or there was, this is the 4 hours a bit of a mixture. We have up momentum, but we have lower lows, lower highs. Let's see. And a 30-minute consolidation that could get broken. Still, pound CAD looks a bit better. The pound yen has flat alligator here. Here too, though. Pound CAD still looks a bit better. I don't know what you think, but both have probably decent potential, though. All right, that's the pound weakness at the moment. Let me take a look at the other currency crosses that we have on the list matching strong and weak. That would be the Swiss weakness against the same CAD, yen, and Aussie. The Camarilla levels, basically the H3 and L3. Good question, Greg. The H3 and L3 means if price is still within those levels, we're in a range within the day. And if we're above or below it, we're in a trending mode. So if at the moment the pound yen has not broken out of its daily range, and taking any short or long is a bit, is at the moment where we're in a consolidation mode. Unless we've really reached the H3 or L3, you can kind of try to trade the range. That's one potential by shorting at the H3 or longing at the L3. I myself don't do that a lot, but it is possible. It's mostly good, I would say, in Asian session, or if we expect lower volatility, or if we don't expect a break. At this moment, in this particular time, with the pound yen, I would be cautious with trading the bounces off these levels because I would say, have a decent chance of breaking to one side or the other throughout the trading day. The other way would be to trade the breaks of the H3 and L3. Personally, I like to have a 15-minute fractal at H3 or L3 and then enter below it, or above it, obviously, above the H3 and below the L3, and wait for the breakout, basically, with the H5 as the primary target. That would be using the Camarilla as a trigger and entry. I do want to see momentum and a trend on the higher time frames for an extra push that I know that the market is lined up to make a good fall or a rise. If that bigger time frame is not there, the break could still be good, but it could also be a higher chance of some choppiness occurring. The H4 and L4 are kind of like intermediate levels between the breakout and the target. And one could use it as basically, for instance, if we break above the H3, we didn't take that trade, we see it H4, we see kind of make a bull flag around like this, then it provides us with an idea about how to trade it. We can trade again the pullback at the H3, or try to take the next break here with perhaps a tighter stop loss below the H3, and then still the H5 as target. So it gives us an idea where price could stop, and we know that in that case, if it's between the H3 and H4, consolidating there, that it's in a breakout trending mode of the day, and could be interesting to look for further trades into that direction. If let's say the trend is down and we get an upside break, then I would be more cautious with trying to take longs here, because in that case, the H3s, H4s, H5s, there's a higher chance at least that they could become actually turning spots for the bigger downtrend to continue. So we could get an intraday rally that goes all the way up here despite the downtrend. But the only thing I want to at least raise attention for is the fact that got to be more cautious. That's the basic explanation. That's it. It's not nothing more, I think. So if you have any follow-up questions, let me know. Okay. So let's take a look at that Swissy. The CAD yen. No, CAD Swissy. We need CAD Swissy. Sorry, not CAD yen. Swiss yen was one of them, right? We're looking for Swiss weakness, but the Swiss yen is an uptrend on the 4-hour chart. So no, that doesn't look that good. We have the odd Swiss. Let me try to find that one. All these Swissies still look a bit strange to me, but okay. Odd Swiss is in a downtrend, but we're looking for Swiss weakness. Yeah, Greg, you are referring to this one. This one, right? Yeah, this odd Swissy is also in a downtrend, but we're looking for Swiss weakness. So that one doesn't. And the last one would be Swiss Aussie CAD. What do we? So CAD Swiss. Let me find that one. If I have it, I'm not sure if I have that one. It's a bit of a, no, not that strange. It's a bit of a unusual pair. So, okay. So, yeah, the pound CAD or pound yen at the moment, I would say. Let's review those maybe just quickly again. Regarding the Camarilla, I think that there's not much difference between the two. The one that you just, this one has indeed the lines full, the other one has the lines shorter. Otherwise, I don't think there's much difference. Let me take a look. Let's see, H3 is at 74.16. This one I received just a couple of days ago, and I've been always using this one. It looks about the same, in fact. I don't think there's much difference. This one that I received a couple of days ago is something that it's something I cannot send, unfortunately, because the person that I got it from asked me not to. So sorry for that. But I don't think there's really much difference between the two. The reason I use wanted to use this one is the fact that it's shorter, so it's more convenient for you to see as a viewer. But if I would be trading it myself, without you looking at my chart, I really wouldn't mind too much between these two. Let's see. I forgot all Swiss pairs after that. Yeah, I have not looked at the Swiss pairs either that much. These pairs are, I think, a bit funky, and still not a big fan of them, to be honest, because of that. But don't really like the factor of the Swiss bank either, to be honest. They've intervened a couple of times this decade, so I'm not a big fan of the Swissies, but do keep an eye on them. So perhaps the pound CAD with the push below 182.10 and the stop loss here above 182.65 and trail stop each fractal. I can use this as a demo just to see how it goes together. Okay, I will not take this one for real because I need to exit today a bit earlier than usual. Let's see. Alrighty. I think pound CAD is a bit better, personally. Let me take a look at, anyone else have a particular currency pair in mind? Let me take a look one more time at that currency here. New Zealand pushing forward. Your dollar still moving down. And you can see that every time this 5-minute candle is pushing and pushing. This is momentum. And this is continuous momentum. So I have to keep an eye on this 5-minute chart and at least see 5 to 6 not breaking the bottom. And then there's a chance that this downside momentum is temporarily stopping. So we see New Zealand strength especially, so the Euro New Zealand must be flying down, and it is. And I am testing a strategy, so sometimes you'll see demo trades here open. And I have a short still here from 142.35. I had a short here from higher, that's closed already. Missed a short up in here, that would have been up as well. But you can see really the euro is the weakest and the New Zealand was the strongest to get off the dollar. The euro New Zealand has, the euro dollar is moving a lot. And we're getting a pretty good 4-hour candle here. I think the euro New Zealand probably is even better than the euro dollar, but we need a bit of a pullback. So later today, I think euro New Zealand could be a good one to keep an eye on. This is a massive fall so far. 90 pips. A bit of a pullback, I would say, on the euro New Zealand. Let this AO go back to the zero line. Let it go back to maybe, well, not even, fib is not even important, actually, to be honest. I just want to see this roll back up, or maybe not even exactly to the zero line, but close to it. And I think this could be an interesting short. In the meantime, when price has retraced, we'll probably see some kind of bear flag. Maybe a move down to up to the 38.2 fib, the 50 max, and we should see downside continue on the euro New Zealand. I think that's actually probably one of the better setups, but not right now, but later, maybe in the New York session. So what I mean with the oscillator is this, let it go back up here like that. Now in the meantime, this could still fall, I'm not saying, but whenever it stops, move the fib to the new bottom, let this roll up, let this go up, and when we see the oscillator here, for instance, show 3 down bars again, or if we see any candlestick pattern on the 50-minute chart, the hourly chart, maybe even the 5-minute chart if you really want to be aggressive, at one of these fibs, when the oscillator is close to the zero line, that could be the earliest short potential. If you want to be a bit more cautious, you can wait for 3 of these red bars again after the green upside retracement, and that could be a short. You're going to have a worse price though, because if you wait for 3 red bars, like here for instance, you see green bars here. Does everyone see that? Here. And we wait for 3 red bars. 1, 2, 3. You're shorting here at 140 instead of perhaps, let's say here. Well, in this case, the difference is not much, but you get my point. In some cases, it could be some difference there. Both are equally valid. Depends what preference you like, but I think that personally could be a very interesting potential, either New York or even after New York. The good thing about it is that it's just, the momentum is just starting. Look at the hourly here. We've had a move back to the zero line on the hourly. And we have a lot of momentum at the moment. The 4-hour chart is even back to the zero line. We're definitely in a big downtrend here on all time frames. We did have double divergence between these bottoms, but we're already breaking the bottom with a lot of momentum. And we had a bit of correction already yesterday. Wouldn't be too worried about that, at least for one more downside. Let's take a look at the euro yen and dollar yen. Euro yen is also breaking down, looks bearish. Same thing. Has a good momentum on, well, actually got a bit of divergence, sorry about that. But it is still in the downtrend. Divergence is something we have to be cautious of, but for the moment, there is a break. So here too, the euro would be a short. Now the yen indeed was relatively pretty strong. We did notice that. So the euro yen, maybe a hook back to the L3, for instance. Same story for downside. Yeah, looks bearish. The dollar yen will probably be a bit different because the dollar is the second strongest. The yen is maybe the shared third strongest. So that will probably be less interesting, I would say. Let me take a look. Slight upside, but not a ton. So I would be a bit more cautious on the dollar yen. Looking for 120.30 today. 120.30. Let's take a look. Could get there, but I would be cautious of this zone here where we have $119.60, 120. No, not one. Sorry, no, not one. 119.96. Excuse me. So let's say 120. Got two fib levels there. 120.90. It's possible. I'm maybe not as big a fan of the dollar yen at this moment as you are, I think. So I would be a bit more cautious, and I think that this resistance is going to be a bit tougher than maybe that you anticipate at this moment. But that's just my opinion. I could be dead wrong on that, but I would be more cautious with this 120 and also even the 120.35, as you said. Let's see, Ravi. Where do you see that? Ravi is uh, curious where you can see that shift. Ah, cool. GMT shift. Yes, it's true. Interesting. So, yes, let's see. Not sure what it should be at this moment. Let me check 1 second. This time is, I think isn't this 3 hours ahead of GMT? I'm 2 hours ahead of GMT at the moment. But it's summertime though. That's why. So I'm not sure about the summertime aspect. Yes, I am GMT2 indeed, GMT plus 2, and CEST 2. And at the moment we're indeed two, anyone who is CEST is plus 2 GMT. But the animal markets is 1 hour ahead of me, of us. It shows 10:30 at the moment when I look at the 5-minute chart. So apparently it's plus 3 GMT, I would say. But it's maybe because of the summertime. So in the wintertime it would be plus 2, I guess. If you look at the 5-minute chart, you probably see 10:30, right? So it seems to be an hour ahead of us. But yeah, I guess plus 2 or plus 3. I'm not sure now at the moment. But does anyone else want to weigh in their thoughts? If you want to change it, apparently that's great that Ravi found it in any case. That's most important at the moment is that there's a GMT shift. So Kalian, I guess you could use that too as well to adjust it as accordingly. I think GMT is 7:33 now, but let's check together. What is GMT time? What is GMT time? Bit slow. Oh, it's telling me what it is, not what the, okay. Oh, anyhow, Ravi's confirming it's 7:30. I thought so, but wanted to check. Good. So it is 7:30 GMT. Alrighty, let's see. So I think Euro yen, Euro New Zealand later today, Euro dollar, they all make sense to me. I personally probably like the Euro New Zealand the most, but and Euro yen the second and Euro dollar the third. The Euro dollar I'm just cautious because I don't see much downside potential as in terms of target. Other currency pair I think that could be interesting is this pound CAD, maybe the pound yen. And that's it so far, I think, that is on the list. The dollar yen, not so much at the moment, and the Swiss not either. And the pound not either. So which pairs do we have left? Let's take a look at euro pound, maybe euro odd. Quite an amazing picture here, this euro pound, but is pushing down. Well, it is a breakout. It is downtrend, so it's certainly not bad, but I'm not a big fan of the euro pound anyhow. Euro odd. Still would be cautious until we prove itself a bit more perhaps on this hourly chart. We're at the L3 now. But still, I would be cautious a bit. I would like to see maybe tomorrow how today reacted if we get some bear flag. Then things could change. But for the moment, if I look at the 4-hour chart, we have a bit of a mixed picture. All right, other pairs we didn't look at, pound New Zealand. Probably the same story, but the euro is just a bit weaker than the pound at the moment. Odd USD. As I said, I'm testing a new strategy at the moment, which means I'm in a short, but I personally don't think that the short will go very far. I do think that these fibs will provide a bounce, so would be cautious with that. And if anything, there could be indeed a bounce potential at these fibs. Kiwi. We're seeing the dollar a bit stronger than the Kiwi a bit stronger now at the moment, which makes sense because we're in uptrend. So the Kiwi upside, I think, could be an interesting trade too, just like the Euro New Zealand, if it manages to go above this 1 hour fractal at least. But Euro New Zealand still looks better because of the bigger gap between those two pairs, two currencies. Dollar CAD been moving down a lot, obviously, after that break. But now retracing because of the dollar's strength. Bit of a mixed picture here, so would be cautious. Obviously, from a standard kind of technical point of view, these two levels could be a bouncing spot for more downside, right? They could be a level where price could stop and move down again. All right, on New Zealand, downtrend. If this one gets up to the H5 or H4, I would actually be looking for shorts more than taking breakouts to the upside. But I'm not a big fan of the out New Zealand anyhow. So, but anyone who does like that pair, that would be my thoughts. Okay, so otherwise the break below L3 I think doesn't have much space. I think that brings us to conclusions. Any questions perhaps maybe? If we look one more time at the strength versus weak analysis, nothing really changes at the moment. What you want to do if you like this indicator and you did receive it from me, then I would be I would give advice to sometimes refresh it, because otherwise it just seems to be stuck or something like that. I don't know. Okay, sorry. Now I see your question. Actually, monthly and weekly, we'll do that. Bearish on the euro yen. I just take it on and off, unfortunately, at the moment. I am quite new to this particular indicator, so but when I'm using it, it seems to me that at certain times it doesn't move too much. I don't know why. Maybe I was just unlucky. But when I took it off and on, when I took it off and then put it back on, it seemed to give different values. So that's why I say that. I don't know. Maybe you don't have that experience. So let me know how you are doing with it. I'm also still using it quite shortly, so perhaps it was just a one-off incident. I don't know. Ah, it depends on the start time, Wade says. Okay. Yeah, that's true. It's going to have, of course, a kind of a kickoff moment, I guess. Not sure actually if it's just continuation or if there is a kickoff moment, because it seems like this maybe is the kickoff moment. I don't know. It seems like they're always in movement somehow. But you would expect a kickoff moment indeed. And you would expect that, or a reference point, as Way says indeed. Yep. Thanks, Ravi, for joining. I don't think I have that actually, unfortunately. The broker, I'm sure, will have some impact indeed. By the way, the euro dollar is giving a bit of bounce. This is the second candle. It's still early, but this may be the first kind of signal that we could perhaps get a bit of a rally again. But it's only the second candle. So anyhow, point is, I don't remember what I wanted to say. Let's take a look at the Odd New Zealand. Huh, yours is in the middle of nowhere. Strange. But the euro you should see the euro at least in the downside, I think, because um, all the euros were falling. I would expect the euro to be on the lower side. Odd New Zealand from a higher time frame. Oh, yeah. Monthly, yeah, we're reaching parity. Broke through that 102, 103 support level that was important from the past. And now heading towards parity. It's pretty substantial move we've had here the last couple of weeks, or half a year maybe. If we put a fib on this weekly chart, the next minus 618 target is at 97.60. So perhaps when we break parity, that would be the target that the Odd New Zealand could fall to. When you look at the weekly candles, we've had basically lower lows and lower highs, except here, 1, 2, 3, 4, fifth candle was bearish, sixth one broke it. So we're still in that bearish impulse. So basically downtrend, looking for downside. Here on the daily chart, we've had a bit more candles though in the meantime, 10. So perhaps we could still use this bottom not for a big downtrend change, but perhaps one more push up to go up to challenge this top, the 102.20 again, and then fall. Because if you look at the weekly, the fall is most likely going to happen. But if you look at the daily, we do see a bit of a pause here. So unless parity breaks, I would be cautious at this moment, and would rather try to short it up in here at 102 or below parity. Downside seems likely, but on the daily, would be cautious and wait for a break or retrace because of the time factor rule. That's about it, I guess. All right, let me check the chat. In the meantime, I will show you the webinars of this week. We have, or yesterday, Ned had a recap, and tomorrow morning, we have Forex strategy, and tomorrow night, Ned is going to take a look at how to set up and manage your space. And then Thursday night, we take a look at 80-20 rule. And 80-20 rule is a concept to become more efficient in everything we do, in fact. And we're going to apply that to Forex trading. Otherwise, I don't think I missed any questions. Nope. Good. Well, folks, thanks for joining. Appreciate it, and great to have your comments as well. And hope to see you tomorrow then. All right. Have a great day. Cheers.